All right, guys, just a nice short video just to go through these new adjustments on incomes. If we see task 10.11, what they've given us here is they've given us a pre-adjustment trial balance. They then give us a bit of information here about it. I'm going to go through it as we go through the next couple of minutes. The accounts involved here, like I've mentioned before, it's always good to identify the accounts involved. We have the following three income accounts involved, so interest on fixed deposit, rent income, and commission income. They're all income accounts. Remember, incomes increase on the credit side, and if you have to reduce the income, you're going to reduce them by debiting those accounts. That's very important when we deal with adjustments, that you understand that part to it. With regards to income adjustments, guys, we're either going to be adding to the income in that financial year, which is those 12 months, or we'll be deducting from that income because we received too much. So those two new accounts involved there is income receivable, that's adding, which is accrued income, okay, and that's an asset, and assets all increase on the debit side. And then we have income received in advance, or often referred to as deferred income. That's a liability. So if that account needs to be increased, we'll be crediting that account. So again, like I've mentioned before with adjustments, identify the accounts involved, and then from there, you're obviously able to attempt the question. Okay, so just to go into a little more detail here with regards to adjustments, I've just done a little illustration here to hopefully give you guys a good example. If we have a look at accrued income, so accrued income is income that we should have received for the full 12 months, and we haven't yet. So in this example, we need to still add additional income for that 12-month period. Okay. So if we have a look at this, the income itself needs to be added to. So income must be credited. And then, of course, accrued income will be where the account debit will be. And like I've said before, accrued income is also referred to as income receivable. If we have a look at the other adjustment to income, this one will be deferred income. So in this example, you can see that deferred income, there's too much income that's been received. So what needs to happen here is we need to deduct from that income account. So the income itself must be debited because we need to reduce the income. And then you'll see deferred income will be the account that will be credited. So again, the double entry system applies. For every debit, there's an equal credit, vice versa. And another name again for deferred income is income received in advance. So guys, that's a nice little illustration for you. I like referring to them as accrued income and deferred income. The accrued, meaning you have to add to that income for that financial period, and the deferred income with the D, meaning you have to deduct from that income for those 12 months. So that's a nice way of just learning it so you don't get too confused. Okay, so we have a look at this question now, 10.11. There was rent that was received. The amount they showed us was 8,400 Rand. That was in the pre-adjustment trial balance. That 8,400 Rand was rent that we received for 7 months. So there was 1 month rent that was paid for in advance for July. So it needs to happen here. That 12-month period, there's 1 month too much. So we actually have to deduct 1,200 Rand, which will be that 1 month's rent, must be deducted. So how do we calculate that? It's 8,400 Rand divided by 7 months. So you know that 1,200 Rand rent per month. So we actually have to reduce rent by that one amount of 1,700 Rand. If we then look at the interest on fixed deposit, the figure they gave us in our pre-adjustment trial balance was that 4,050. Okay? That was received for only 9 months. So you can see here what's happened is there's a portion here that is outstanding. So we still need to add that accrued income there of 1,350 Rand. How do we get to that? I'll show you quickly. So interest on fixed deposit was for 9 months only. So if we took the initial amount divided by 9 times about 12, it should have amounted to an amount of 5,400 Rand. And there you can work out that the amount that is short is for 3 months, which equates to 1,350 Rand. We then had commission income. Commission income here amounted to 24,540. That commission income again was for 13 months, not 12 months. So you actually have to deduct 280 Rand of that commission income. So if you have a look here, the commission income figure needs to be adjusted by 280 Rand, and you had to reduce that by the 280 Rand to get to the new figure of commission income for those 12 months of 24,260 Rand. If we then just take it through, gents, Reminding you again that when we deal with an income, incomes all increase on the credit side, and if the income account needs to be reduced, you have to debit it on the debit side. So if we just go through these adjustments that we've looked at already, interest on fixed deposit, we had to add interest on fixed deposit, we had to add an additional 1,350 Rand. That's why it will be the account that we credited. If we look at rent income and commission income, these two we had to deduct. Okay, so they were deferred income and that had to be deducted, and that's why they've been debited. So we just take it through to your ledger accounts as well. If we have a look at interest on fixed deposit, we had to add to that interest on fixed deposit for that 12-month period. That's why we've credited, we've added to the income, interest on fixed deposit. Again, for every credit, there must be an equal debit. So you'll see that income receivable or accrued income will be debited by that amount. If we have a look at the rent income, we had to reduce the rent income for that to reflect only those 12 months. That's why we've debited rent income. And then there must be an equal credit, and you'll find it there in deferred income. Same thing with commission income. We also had to reduce commission income for that 12-month financial period. That's why we've debited commission income, and you'll also find the equal credit there in that income received in advance or deferred income account. Okay, gents, and then finally calculating your fixed deposit amount. That's the calculation for you there, and then obviously the rest information we've dealt with already. So gents, I'm hoping that that's a good little example there for you guys, and hopefully we can continue and you guys will have a better understanding of the next question when you get through it.